Hello everyone and welcome to my morning report chart analysis videos on Wednesday 13th of June with me, Richard Perry, market analyst at Hantec Markets. We have a fairly sort of mixed outlook really, nothing really doing in terms of direction, although you do have a degree of sterling weakness, Brexit related really. It certainly seems the uncertainties around how the UK Parliament again deal with Brexit just continue really, and that is hit Brexit hit sterling to an extent today, but we've got the Fed, which is the big focus of today. 7 o'clock this evening, we've got the Fed announcement. And in front of that, you've not really got any real direction. Equity markets sort of hovered in the US session. They mixed in Asia, slight gains on Nikkei with the weakness of the yen. But generally speaking, European markets are sort of mixed today on equities. Slight element of dollar positivity through that sterling weakness and also the yen underperformance, but again nothing really doing in terms of direction. Now what we have is Treasury yields, which had initially sort of pushed higher a touch on the 10-year, just settling back down again, and that sort of has sort of played into this sort of consolidation and mild little move higher on the dollar today, but not, as I said, nothing doing in terms of direction. I think we're waiting for the Fed, but the Fed tonight is not expected to sort of move especially hawkish. I mean, the market has already priced in 25 basis points of rate hike, and that is a given. This would be the second rate hike of the year. Now the question would be, is it going to move hawkishly on the dot plots and also the inflation forecast? That is the key to this evening. Is it going to do that? Now it would be a surprise, I think, given the uncertain backdrop of trade disputes. It would be a surprise if the US Federal Reserve went significantly hawkish. So I'm not entirely sure that they are going to do that tonight, but that would be the risk. And if that is the case, and the Fed does sort of increase its inflation expectations quite significantly, and also on the dots moves towards an average of 4 rate hikes this year, then you could easily see these the 2-year pulling higher on the on treasuries, and also the on the yields, and also the 10-year maybe back towards 3% again, and that could see drive a bit of a near-term dollar bounce again. But how long that will last for would, I'm not entirely sure you're going to see an enormous amount of traction to the upside on, or sustainable traction, I should say, on the Treasury yields, which would ultimately sort of hamper a dollar strong bull run. Now, apart from that, we've got UK data this morning, and this is important data because we've got the UK CPI inflation data expected to tick mildly higher to 2.5% on the headline, and the core is expected to stay at 2.1%. Now we had wage growth dropping slightly yesterday to 2.8%, so that would just tighten those real wages back again, but that would be something that again would sort of be a bit of a drag on sterling, because the Bank of England is certainly looking at real wages, I think, and needs to see real wage growth. And if they see real wages tightening again, that would sort of just dampen the expectations of an August rate hike, I think, for the Bank of England. Now, other than that, we've got the EIA inventories this afternoon as well. Expected to see a 2.8 million barrels of drawdown on the crude stocks. Now, we saw an API inventory build yesterday, and that is why we've seen the oil price lower today. But yeah, the crude stocks on the EIA are expected to show a drawdown of 2.8 million barrels, so that could be the one to watch this afternoon. But the Fed is really the focus for markets today. Now, my chart today is Euro Yen. Now, we have seen the Euro, which has recovered strongly in the last sort of couple of weeks. Had a bit of a consolidation last week, but has actually continued to build this uptrend through that consolidation. And you look at the momentum indicator, stochastics rising strongly, MACD also RSI above 50. This all sort of points towards the continuation of this recovery. You're back above 129 figure, which the market sort of dropped below that, but bounced strongly back above it, and is holding that uptrend back higher again. And it all sort of points towards, if you can break out above 130.27, which is that initial resistance, tested on a couple of occasions in the last week. If you break out above that, you're looking at 131.35 again, which were these late May highs. So they would be then back on the agenda, and that would start to sort of turn the market sort of more in terms of building the recovery again. You've got the upside potential on the RSI. Certainly the 60 level capped the gains in April, but mid 50s, and at what's that, 7-8 week highs on RSI, so still pulling out higher, and also with the MACD and stochastics pulling positively. That's continues to sort of build this improvement. And you can see that improvement also on the hourly chart, whereby you've got the momentum indicators positively configured. Although a slight degree of consolidation in the past sort of day or so, you'd want to see the market sort of holding on to that 29.40 to 29.50 support of the last few days. But as I said, 130.27 is that key near-term resistance, and breakout above that would certainly move the market higher. I'd say that this could be a mover on the Fed, purely by the fact that the yen would come under pressure from the dollar on a more hawkish Fed, basically. So watch out for that this evening as well. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.